So now to the hotel and pub sector of the market. Again, this is a sector where we saw a phenomenal volume of deleveraging over the last 12 months. In total, over 63 hotels were sold across the country in 2014, compared to 33 in the previous year. Over 340 million was spent on these hotels, which is a very significant increase on the previous year. In addition, a further 355 million of hotels transactions were in legals at year end, suggesting that the volume of activity will be even stronger in 2015. Over 40% of the spend on these hotels emanated from Irish buyers, which is encouraging. In addition to deleveraging from NAMA and the various banks, we expect to see a lot of secondary trades of hotels purchased over recent years, and many more consensual sales in a sector where much of the activity over recent years has been distressed. We expect to see more hotels trading as loans as opposed to asset sales this year, and we also expect to see a notable increase in the number of portfolios of hotels that are brought to the market and sold. The value of hotels has increased over the last number of years because the performance of hotels is very much dependent on their trading performance. And against a positive economic backdrop, a 9% increase in tourist numbers year on year, and the retention of the 9% VAT rate, we have seen the domestic hotel sector market improving. 2015 will also see the first signs of new development of hotels happening in the Dublin market. There are several hotel projects in the planning process, and we will see development commencing. However, this will be limited to Dublin, with no new hotel development envisaged anywhere else in the country. We're also likely to see some new legislation coming in around the minimum size of hotel rooms, which will have implications for the Dublin market and may see some new budget accommodation coming on stream as a result. We also expect to see an increase in the availability of traditional bank funding for hotel projects over the next 12 months. A very similar picture was envisaged or experienced in the Dublin pub sector in 2014. We had over 38 pubs trading in Dublin with a total capital value combined of over 44 million, compared to 19 trades in the previous year. We also had a significant number of pub properties in legals at year end, which will boost Q1 2015. The ending of the capital gains tax waiver on the 31st of December certainly had an impact in this particular sector of the market, with a flurry to get transactions completed by year end. Unlike the hotel sector, we're not yet seeing consensual sales in the pub market, with many of the properties that are being brought to the sale coming from distressed situations. Again, unlike the hotel sector, where many of the properties that are likely to trade this year will form part of portfolios, much of what will be sold in pubs will comprise individual pub sales. We expect to see some of the owners of multiple properties coming back out and buying additional properties this year and building up their portfolios. In many cases, these buyers will be funded by international backers and international funders. A key change in the pub sector over recent years is that the purchasers of pubs are now solely focused on the underlying business and the profitability of that business, as opposed to focusing on alternative use values. We've seen an increased focus on the food and drink element of these business. Ultimately, profitability affects value, and in that respect, it will be interesting to see what effect Wetherspoons, who intend to buy quite a lot of pubs in the Irish market over the next 12 months, what effect that will have for the pub sector in the short to medium term. The demand for pub licences is expected to remain relatively weak over the next 12 months, with pub licences expected to trade for somewhere in the order of €55,000. All in all, we're expecting a very strong volume of activity in the pub sector again in 2015, very strong appetite from buyers, and quite a lot of deleveraging still to come from NAMA and various banks and financial institutions.